Let's bring in former Walmart U.S. CEO Bill Simon. He currently sits on the board of Darden Restaurants and Hanes Brands. Bill, welcome. Good to have you with us.
Hey, good to be with you. How are you?
Let's say you're back at Walmart today, and you're probably doing high fives. It's a pretty good report.
Yeah, really doesn't get a whole lot better than that. Those guys have really done a good job. It's really important. You tell them what you're going to do, and then you actually do it. And then you tell them again, and you do it again. And that's what happens. And I think they've done a good job at that.
Is the economy and the consumer setting up to favor is Walmart in a perfect place for where the consumer is and the economy is today?
Well, the company was built for times like this and the economy like this. They've got a real nice tailwind with food inflation that's been pushing them along for the last couple of years. They're just so able, as Doug mentioned, to deliver on the value proposition that the customer is looking for right now. And, when half of the customer's disposable income is in food and rent, you're really looking for a break somewhere. And Walmart's able to deliver that. And they've been able to do that for a number of years.
What do you make of the Vizio deal? How does it fit?
Yeah, it's kind of a head scratcher for me. Walmart's exactly forever on things that they bought that are not retailers. You kind of got, Bonobos and Voodoo and Jet, and it's sort of hard to figure out what they're doing there, especially with the competitive brands that they sell. But, I don't, it's hard to second guess them. They've really done a great job repositioning themselves. So they must have a plan. I know they've said they want to do it to try to build their advertising business, but we'll see.
How big a factor going forward will the advertising business be? I wasn't even aware that they were that big in advertising, but evidently they are.
Well, if you look at their business, it's still retail. It's still just a massive retail operation. And you kind of even look back at the last 10 years. Over the last 10 years, they've added $200 billion in top line sales, top line revenue. A lot of that's through third party online. But they've made $1 billion less. Their operating income 10 years ago was $28 billion, and last year they reported $27 billion. So they're in the process of restructuring from that hardcore brick and mortar asset driven retailer into other areas where they think that they can be competitive in the technology space, and that advertising is important to them for that.
Bill, Target's rallied probably 45% since the low, understanding that the stock is still nowhere near its all-time highs. They report on the 5th of March. Can you draw any conclusions for Target from Walmart?
I like Target. Brian Cornell is a really good retailer and a good leader as well. And so I think they're well positioned. The biggest difference between Walmart and Target is their food mix. I mean, Target doesn't have the grocery business that Walmart has, and so they don't have the inflationary tailwind pushing customers into their store. They're more general merchandise and apparel and fashion. Those categories have been struggling. But that's going to turn around. The inflationary headwinds are easing, so the push that Walmart's getting is going to abate. And people eventually got to buy clothes, right? And they've been reluctant to do that because of lack of a disposable income. So I think the tide's going to turn for Target, maybe not this quarter, but I think coming up.
Hey, Bill, you just mentioned that the Vizio deal is a bit of a head scratcher. We've long opined on this desk when we looked at Amazon and what they've been able to do in advertising, and you just associated the Vizio deal with advertising. It's been an absolute monster. And to me, it would make more sense to look at a much bigger deal like a Pinterest or something like that. If you really want to get into the digital ad space and you're doing $500 billion in sales a year and you have a $500 billion market cap, it seems like stop messing around with some of these smaller deals and really get in there and go after it. I'm just curious how you think about that, because you mentioned the Jet deal, which a lot of folks said didn't really work, but it did kind of re-center their focus on digital sales when they made that deal.
Yeah, look, I'm not going to second guess those guys. They've done a really good job with pretty much everything they've touched recently. So while I might scratch my head, maybe that's why I'm at home and they're still working.